Hello and welcome to the Navigating Risks podcast. Today I'm joined by Hugh Morris, Gallagher Risk Management Solutions Strategic Risk Consulting Team Leader. I started by asking him whether business continuity management is more important than ever against a backdrop of increasing volatility and uncertainty.
I think it's definitely more important as more organisations become more aware of the sorts of risks that they see going on in the world. I think just the wider range of consciousness about risks and how businesses can be disrupted has occurred partially due to COVID, but then all of the other things that have happened in the world as well. I think it's definitely a subject that is being required more by multiple stakeholders now. So that might be customers, it might be regulators, it might be insurers, but there definitely also needs to be flexibility in any business continuity arrangements that people put in place, because there's no way that people can think about all possible disruptive scenarios, but people have become more conscious of those polycrisis issues. So people have thought about economic and financial crises that might lead to protests and civil disruption. So they might need to have response processes in place to dealing with financial risk. But also, in the meantime, depending on the sector, they might have to deal with the fact that they've got other things going on in the outside world. And of course, with COVID, had multiple impacts, but then also could lead to other things such as major disruption to the supply chain. So we might have had businesses in the UK that were getting back to some form of business as usual, but they still couldn't operate as normal because there were other territories around the world where there were still implications from COVID, where they hadn't quite recovered as quickly as we had. So it's definitely focused minds a little bit more that meant people think more about the complex risk environment, but also the type of response plans and processes and procedures that they need to have in place to deal with those things.
You mentioned that it's difficult to anticipate every shock or curveball that might come your way. Can you talk me through the business impact analysis and risk assessment that companies go through?
They are quite different things, and it's one of the things we talk about with our clients when we're engaged in any work like this. The business impact analysis is exactly what it says. It is really designed to look at the impact on an organisation of some form of disruption. So it's the impact on the activities that the organisation carries out to a certain extent, regardless of what's caused the problem. So it's more about thinking, if something happens that means we can't operate business as usual, what are the most time critical priorities that we want to continue with? What are the resources that we need to have in place to deliver those priorities? And what are the contingency solutions we can have in place for those various different resources? Risk assessment, though, is then looking at both the internal and the external threats that could cause a significant disruption to those priority activities. So internally, clients might think about equipment failure or failure of technology, a fire, a chemical spill, those sorts of things that could happen on premises or within a business that might cause that sort of disruption. But externally, people are starting to think, I think, a little bit more around things that might be a bit more dependent on sectors, geographies, their customer base, and the sorts of things that could cause disruption. So it might be risks such as natural disasters. It might be things like neighbours having a problem. So we saw that when the fuel tanks at the Buncefield depot exploded and caused a fire. One of the clients I was working with at the time actually ended up having to knock their building down and relocate. And we also see increasingly people thinking about their supply chain and their suppliers and potential failures in that area. And particularly maybe thinking further afield than just their immediate tier one suppliers. They're starting to look a little bit more in detail further down the supply chain. So you can't predict all of the possible risks that might occur that could cause disruption. And therefore, things like the volcanic eruption in Iceland going back to 2010 that led to the largest air traffic shutdown since World War II. And then we saw only a few years ago in 2021, the Ever Given gets stuck and block the Suez Canal. Nobody had put that on their risk register, or not that I'm aware of, but it did highlight the sort of key choke points that might occur in an increasingly global supply chain. So the way that business is operating globally now is quite different to a few years ago, but that can bring in some of these other risks that aren't necessarily foreseeable, but any business continuity arrangements that are put in place need to be flexible enough to deal with things that you haven't identified as possible.
Do we also see in a more digital and connected world that we're seeing a shift away from kind of more tangible to intangible risk when it comes to sources of business interruption?
I think we do in certain cases. It really, again, that point reinforces the need for business continuity strategies and solutions to focus on the different impacts rather than being too hung up on the reasons for disruption. So the way that we tend to think about that are around categories of disruption. So we think about denial of access to normal premises and equipment, and that might be from internal problems like fires or machinery breakdown, or it could be external. So if we go back quite a number of years now, we had quite a significant foot and mouth outbreak in 2001, and that caused quite significant disruption and travel restrictions in certain parts of the country, which meant even if an organization had their premises available to them, they couldn't get to it and they couldn't ship stuff from it. So going back some time ago, people were thinking about those sorts of slightly more esoteric risks. People also think about tangible things such as equipment failure, but then have now started to worry about, well, what external support might we need from equipment manufacturers? What technical and expertise do we need? What is the situation around lead times on parts or replacement pieces of equipment, which can sometimes be many, many months? Some of the things that have also come up and we concentrate on is things like, and particularly since COVID, there's issues around unavailability of people, and that might be key individuals or it might be groups of people with specific skill sets and knowledge. Internally, that might be due to things like industrial action. So I've got a client just at the moment who suffered from that last year, and they're reviewing some of the issues around their continuity plans as to how they might deal with that if it happened again. But of course, externally, something like COVID-19 absolutely hit the availability of large numbers of people in some places more than others. From a technology point of view, of course, issues around IT and communications are one of those things that seems to be an ever-increasing risk. Can be an internal issue, but we're actually increasingly seeing it as organizations being reliant on third parties providing services. So whether that's cloud-based technology, whether it's software as a service provision, and are organizations actually properly assessing those third parties' resilience and recovery arrangements when looking at them as potential vendors? So again, it's starting to look a little bit more at some key suppliers, and that links in really to the wider supply chain as well. Historically, I think a lot of organizations made their supply chains as lean as possible, went down the route of single source suppliers, probably got better commercial deals on that basis. But I'm finding that more and more organizations are looking at resilience by identifying multiple vendors for products and services. However, one of the things that we have seen is that even when sourcing from multiple suppliers, there can be more regionally based natural disasters that can actually affect centers of excellence where multiple suppliers might be based. So, for example, not long ago, and to a degree it's still continuing, shortage globally of semiconductors, a major issue. One of the issues that can affect that is a drought in Taiwan. And of course, semiconductor manufacture is a massively water intensive process. And when Taiwan did suffer from drought, it didn't matter whether you were buying chips or semiconductors from one particular factory. There are a number of factories in the same area geographically, all affected by that same risk. So I think a lot of organizations have started to think about things that might not necessarily immediately spring to mind as being risks for them directly where they are, particularly in the UK, we don't get a lot of these major natural disasters, but they have to start thinking a little bit more widely about what could affect them. One of the other things we saw a little bit more recently was some major floods in Bangladesh, and that affected not just the Bangladeshi environment and their agriculture, but it also had an impact on the fact that there's a lot, Bangladesh is quite a hub for clothing manufacture. So some of our high street retailers needs to have sources of supply, not just in one country. They might have them on different continents, never mind in different towns and different factories. So yeah, the world is changing, and people have started looking a little bit more widely at where some of these risks might affect them.
Absolutely. And amazingly, and it makes me feel quite old, but it's 15 years since the Thai floods, which was kind of a big wake-up call in terms of how these vulnerabilities within global supply chains could then have a knock-on impact. One of the pieces of research that we've just done on supply chain found that 9 out of 10 businesses have experienced some sort of loss or claim within their supply chain in the past year, which is quite amazing. And asking about resilience strategies and that, we found that there was this kind of shift away from that just-in-time manufacturing towards things like diversification and onshoring, as well as stockpiling, given all the uncertainty surrounding things like tariffs at the moment, which is quite interesting.
Yeah. And one of the clients I worked with a year or two ago, who were a clothing retailer, just going back to that particular subject, recognized that they were at the sort of fast fashion end of the spectrum. And if they had a problem with one particular supplier, that's their season done. So they actually source from multiple countries now, multiple suppliers, just picking up on that to say it's not good enough to say we've got this low-cost manufacturing environment in Bangladesh. We also have suppliers in Vietnam. And in case there's a problem further afield and going further east, we've actually got suppliers in Turkey. And we have our footwear made, or at least some of it made, in Portugal. So they've spread their risk by not just going on the cheapest possible solution from a single supplier or a single geography. They've really spread it further just to try to mitigate that potential issue. And if there is a problem, maybe in transport as opposed to anything else from further east, then at least they've got some solutions closer to home. And they're talking about road and rail transport from continental Europe getting to the UK if there is another problem, like the Suez Canal being unavailable, for example.
And I suppose these resilience measures do all add cost into the system, but, as a result of that, you are less impacted by disruption, hopefully, and disruptive events. In a more volatile and complex world, how does the business continuity plan help to mitigate the impact of some of these more disruptive events?
I think as much as anything, it's about having a robust structure and framework for response. Again, regardless of what the disruption actually is, it's the business continuity. Whilst there is a need to understand what risks people are exposed to, the response needs to be flexible enough to deal with any situation. And I think the argument that we would always put to clients is don't try to anticipate every possible curveball that might come at you. Create that ability to respond effectively rather than worrying too much about exactly what's happened. So a lot of organizations do focus on their internal processing and activities that they carry out, but some have to also look at their responsibilities to provide a service to the external world. So people like emergency services and a lot of public sector organizations, even if they have a disruption to their own operations, they've got to recognize quite often a legal responsibility to still carry on doing what they're doing. So regardless of a situation disrupting them, they have to be in a position to continue to provide their service. So they can't anticipate what might cause a disruption, but they've got to have the capability to respond effectively and quickly to what they're doing. It's not about making widgets in their cases. It's about still being able to send an ambulance out.
At Gallagher, what sort of clients in terms of size, sector, etc., typically come to us for support with developing their business continuity management system? And has that evolved at all in recent years?
Actually, I would say anybody and everybody, small, medium and large, across all sectors, across the private sector and public sector as well. We've worked with companies with fewer than 10 employees all the way up to FTSE 100 companies and companies with subsidiaries overseas. We often do see spikes in certain sectors of a requirement, whether that's a new regulation in that sector, whether it is actual incidents occurring in a particular sector. So we've certainly seen slightly off the sort of core business continuity piece, but retailers being hit with cyber attacks means that there's quite a push in that environment to do more work to make sure that people are resilient to that type of issue. And sometimes it can be due to insurers. In the last 3 or 4 years, we've seen quite a lot of insurers who specialize in the life sciences sector asking for those types of organizations to have continuity arrangements in place. Historically, they've been quite entrepreneurial, very fast moving in terms of trying to get developments in place that eventually go through many, many years later to development of new technologies and drugs and the like, but haven't necessarily in the early days been thinking about what happens if we lose all of our human tissue samples that are in a minus 80-degree freezer? What happens if we have a power cut, etc.? So insurers in that particular sector started asking these questions in a bit more detail. So although we cover all sorts of businesses of all sorts of sizes, we do see those spikes in requirement for various different reasons.
You mentioned power cuts there, and that made me think of the big Spain outage that we saw last year in Spain and Portugal as well, I think. Do events like this kind of remind businesses of what their exposures might be? And do you sort of tend to see a bit of a response to those kind of events?
We do, and sometimes it's because people have been directly affected themselves. Sometimes their customers have been affected. Sometimes their suppliers have been affected. Sometimes it's a whole industry that's affected. And I think as much as anything else, the very nature of sort of immediate global news now, if these big events do happen, people know about it. A lot more organizations, they have people within their organizations who watch the news and see this stuff going on, perhaps more than we might have seen in the past. But it's not just knowing that it's going on, it's actually saying, well, actually, if that happened to us, or if that happened to our suppliers, or if that happened to our customers, it's not done. But if it did, what would we do about it? The sort of what if question is something that I think is more common across all sectors now than perhaps it might have been previously.
Yeah, it's a useful scenario planning exercise to go through, isn't it?
Yeah.
Given the stage of the commercial insurance cycle that we're at, and with commercial insurance pricing starting to become more affordable than it has been in recent years, what opportunities does this present clients when they look at their business interruption coverage alongside the frameworks that they've put in place around business continuity management?
We're always encouraging our clients to review their business interruption covers, including supplier and customer extensions, once they're confident that they have robust business continuity arrangements in place. It's a little bit chicken and egg situation. Do you buy the right level of business interruption cover, or do you buy the maximum that you can afford or you think might be necessary? And then once you've got business continuity arrangements in place, maybe you can fine tune the insurance cover, and vice versa. What do insurers want to see from a business continuity perspective to make sure that their exposure is as limited as possible? So they do work hand in hand. Certainly includes looking, when we're talking business continuity and when we're perhaps assessing how robust business continuity arrangements are, we'll certainly be wanting to consider things like indemnity periods for the business interruption cover, what the levels of cover are, and the need for elements such as additional increased cost of working adding in, which can help, of course, actually implement the business continuity arrangements. So typically there's a mix of client, insurer, and risk management working in a tripartite way to make sure that nobody's overly exposed, the right cover is in place to enable those organizations to get back up and running to any sort of pre-loss level of business as quickly and sensibly as possible. But if part of that strategy is to ensure that the right insurance cover is in there to pay for that quick response and recovery, then the things do work hand in hand.
Yeah, it is important. I know as a company, we've written quite a lot in recent years about the challenges surrounding underinsurance. And I think quite often companies might assume that, say, 1 year's indemnification period is enough. But given the supply chain disruptions and other things that we've been talking about, that can actually prove insufficient.
Definitely. And even not thinking about supply chain, just thinking about if a factory burns down, the amount of time it takes to clear the site, get the relevant permits back in place and permissions from local authorities, sometimes rebuild, re-equip, get back up and running. Depending on the business, they might have all sorts of validation and qualification processes to go through before they're able to be back up and producing again. That is not typically done in a 12-month period. So understanding what those continuity solutions might be and considering the level of insurance cover and the time that it will pay out for is an important part of that bigger picture. I think the existence of robust and validated business continuity arrangements is something that is really pushed by my broking colleagues when talking to insurers in the insurance market to say, look, these clients have thought about this, they've analysed it properly, they understand that these are the sorts of contingencies that are in place. You're perhaps slightly less on the hook for payouts as you might be because of this good work that's been done. So it's not just about making sure that the business interruption cover is right. It's also about persuading insurers that the proactive risk management work is actually beneficial to them. And we still see now that multiple insurers, depending on individual situations, will provide bursary money to help clients actually pay for getting business continuity arrangements in place. It's to the benefit of the insurers as well as to the insured. So we still get asked to do work with clients where part of the fee is actually being picked up by the insurer, not the client.
At the end of the day, it's about getting back up and running as quickly as possible, isn't it?
Yep. And if this stuff has been thought about ahead of time and people aren't running around like headless chickens in the event of there being a disruption, and they've got something to refer back to that gives them some guidance as to what they're actually going to do and how they're going to do it. Not meant to be a standard operating procedure, but it's a source of information and guidance that's been thought about when things aren't disrupted. It just means that they can get things moving more quickly than otherwise.
And preferably something that's, regularly practiced and referred to rather than something that sits on the shelf gathering dust, I imagine.
Absolutely right. We always talk about how business continuity arrangements are live things. They do change. Actually, with a lot of organizations, the biggest change or the most frequent change is people. So if there are details around exactly who is going to do what, that often is the thing that changes most frequently. But then companies will change processes, change equipment, change technology. So there is an argument that says the minute a business continuity plan is actually written down, it's out of date. That's probably taking it a little bit too far. But absolutely, it needs to be validated, it needs to be tested, it needs to be exercised, it needs to be improved, and it needs to be kept up to date.
We've never had more access to data and risk insights than we do at this moment in time. What are some of the developments that excite you as you look to the year ahead?
I don't know about excite, perhaps. That might be pushing it a little bit, although I've been doing this a long time, so I do find it quite interesting. I think a lot of our clients now are using many more sources of available data and insights to shape their risk management and business continuity activities. So publications such as Gallagher's own Business Risk Index report, the Business Continuity Institute's Horizon Scan report, Allianz issue a risk barometer every year. They're getting increasingly useful. And I think the thing, to a certain extent, that does excite me is that when I look at all of those sources, they're all actually pulling out similar themes. So they're all the people that they're speaking to, and it's different groups of people and different companies and different people around the world, different territories. they're all coming out with some fairly consistent pieces of information that do enable clients to focus where their effort is. And it actually helps us because we've got that degree of consistency when we're talking to clients to say, well, all of these different sources of information are coming up with the same broad subject areas that are giving many people cause for concern. I mean, going into the future, the predictions really for the next 12 months are pretty consistent with some of the longer term predictions over 5 or 10 years even, where people are really looking at increased technology and cyber risks. And obviously that's on the top of people's minds because it's something that they see happen. But also, as we mentioned earlier, what technology looks like and where people are getting it from is different now than a few years ago. We also see concerns as well as opportunities around the further development and use of artificial intelligence. So that's definitely something that a lot of people want to invest in and look at how it can help their organizations, but also put it on their risk register as to what they're going to do if they do start operating in a different world, making more use of AI. We've talked quite a bit about supply chains, and that's definitely something that's right up there in terms of supply chain disruption in all sorts of different ways. People are concerned in some parts of the world around some weather events becoming more and more extreme. So whether that is as a direct result of climate change or whether it's coincidental large natural disasters of one sort or another, it's certainly something that people are thinking about. And even in the UK, where, as I mentioned earlier, we don't have quite the same level of extreme weather as people do in some parts of the world. Again, it's that link to the supply chain. Where are you getting stuff from? And are they concerned about those types of events? And I suppose the final thing in that sort of top 5, if you like, that people are concerned about is critical infrastructure. So the way, again, lots of linkages back to how can infrastructure be damaged? It might be weather events. What are the implications on loss of power? How resilient are power networks based on people's increased use and demand on a network? We all hear stories about the national grid in the UK being at its limit, and organisations who are starting to have more of a demand on electrical power are always going to be questioning how robust and resilient that sort of infrastructure is, at stuff that they've got very limited or no control over. So I think the existence of these various sources of insight and data gathering really just helps a lot of organizations focus effort. If they've got limited resources, what are the things that experts in the world out there are looking at, and how do they make their organizations and the way that they operate more resilient? And I think that's the thing that's most changed in my world in the last few years. It's not necessarily just about recovery and continuity when something goes wrong. It's making that link to try to make organizations as resilient as possible. Yes, stuff can still go wrong, so business continuity arrangements need to be in place, but there's a lot more focus around trying to make sure that things don't go wrong or are limited in impact as far as possible by putting resilience measures in place, which, yes, sometimes cost money. So it's not necessarily the cheapest way to manage risk, but it's often a balance between trying to limit things happening or happening to a certain level versus having to recover from things significantly disrupting organizations' normal operations. So whilst the concept of resilience has been around for a few years now, I think it's something that we're talking about more and more with clients, and they are looking at these types of risks globally that are predicted to be at the sort of the more likely end of the scale, and considering how they can make their businesses resilient to those things which people are predicting will happen to a greater or lesser extent.
It's becoming more embedded, isn't it, through things like the UK's Flood Re scheme and the Build Back Better initiative there. And I've seen some studies citing that for every dollar or every pound that's spent up front in resilience measures, you save another £10, $10 in the long run, which kind of explains why, that dividend is there. But I guess it's about the education aspect as well.
with a lot of organizations that we deal with, particularly in the sort of mid-market sector, there's not often dedicated resource within the client organization to spend a lot of time doing this sort of thing. So the more that we can help clients with in terms of articulating what that world of risk looks like, the better place they are to be able to focus their efforts on the things that could really make a difference. And that might be on increased mitigation in some identified areas of risk, and it might be in terms of spending time and effort to get robust business continuity arrangements in place for if things do actually go wrong.
That's absolutely brilliant, Hugh. Thank you so much indeed for your time and insight today.
Absolute pleasure. Thank you.
That's all we've got time for today. Thanks for listening. In the next episode, we'll be looking at the exposures that businesses could face from PFAS, also known as forever chemicals, and how best to mitigate liability risks and assess and remediate contamination.